JJ the CPA here. Hope you're doing well. Listen, let's talk about PPP loan forgiveness, okay? Because it's kind of like that fifth grade math story problem. So I'm gonna put it up here, and then at the end, I'll do a close-up on it. So if you want to do a screenshot there at the end, that you can. So what we want to look at here, and when you go back, or if you want to pause and go get, but what we want to look at here is your PPP application, okay? Your PPP application. And the reason that we want to look at that application is that you'll be able to see, okay, what was your average monthly expense. So you need to know that number. Don't just act like you know it. You need to know it. And it would really be good is if you got a scratch piece of paper out and you would do this, because this will help you really, I think, digest it and maybe feel a little more relaxed about it. Then we know that on that application, we took this number times 2.5, and then this right here, okay, this right there would be what you should see if this were your numbers, but this is that loan, okay, max. Okay, so what we know is that 75% of that loan needs to be used for payroll, okay? So we're gonna take that 75%, okay? And if we take that, it's $93,750, okay? But the thing to note is that's for 8 weeks, okay? So that's how much needs to be spent over 8 weeks. But let's keep this in mind. Really though, if we're trying to break this down, it's $46,875 a month, right? Because if this is for 8 weeks, then this would be for 4 weeks, which is just half of that, right? So then this would be what's needed to be spent on payroll costs to get full forgiveness, if you will, okay? But here's what I want you to know, okay? Check this out. If I look at this number, okay, which is the per month, okay? That's the per month. Look up here at this number, okay, that was on your app, okay? It was 50,000, okay? So this gives you a little bit of cushion, right? I mean, your monthly that you were basing it on for your total payroll costs was 50, okay, over the last 12 months. There's your loan max of 125,000 times 75%, okay? So 93,750 has to be spent over 8 weeks, which works out to $46,875 for the month in this example, okay? But that's less than the average. Now, the one thing that people are wanting to forget, I mean, how do we know? This is brand new. But what is payroll cost, okay? So when we're talking about payroll cost, it's the same as what went into that, okay? It's not just payroll, it's the payroll costs. And the law allows for gross pay, okay? There was a period of time where there was maybe 36 hours that people were thinking that it was going to be the net pay, but it is the gross pay, okay? And then it is the employer paid health insurance, okay? And then the employer paid retirement, and then SUDA, okay? So all of these things, okay, all of those things make up that 75%, okay? And it's, yes, you need to spend at least that, okay, for loan forgiveness. So just, you have 50,000, that was your average monthly, times 2.5, okay? That put to a max loan of 125. You need to spend 75% of it on payroll costs. So that's 93,750 over 8 weeks. Take that as a half, because then it'd be per month, 46,875. See how we already even have a cushion there. Okay, that would be for 1 month, 46,875. But on the payroll costs, it's the payroll, the ER paid, health insurance, ER paid, match, and the SUDA. Okay, that's what makes up the 75%, and that needs to be spent at least on that. Okay, then take note here. Okay, this is no more than 25% to be spent on these other expenses here. Okay, so we're talking rent, we're talking the biz loan interest, we're talking utilities, which is gas and water and electric and the landline phone and the internet. Now the SBA may come out and give us some further clarifications, or maybe just expand what the definition is. But right now, all we know is that it's going to be the most basic. Okay, so getting a number of questions about, well, it doesn't include the IT expense. Just going to be the internet fee that you're paying to, AT&T or Cox if you're in Oklahoma, right? It's just what comes on that bill, right? It's not the IT in addition to. It's not office supplies. It's not, recycling. It's not the Stericycle. It's not anything else you can think of other than what do you get on the city bill? What are you getting for gas, electric, water, right? Basic utilities is all we know right now, okay? And then rent, okay? Rent. Now, if you have a separate add-on for rent, such as CAM or maintenance, that's not going to be included. It's the rent, all right? So when we're talking about these expenses here, also included is the interest on business loans. So not just what's paid through the business, okay? So if you have something paid through the business, but if it's not in the business name, it's not going to be included in that. So we look at this and we say, okay, we've got rent, business loan interest, utilities, gas, electric, the landline on the phone, okay, if I didn't say that, and then the internet, okay? No more than 25% spent on those things. Now, I'm also getting a lot of questions of, hey, listen, JJ, my utilities and rent and the interest and telephone line and the internet, it's way less than that number, okay? It's way less because if we were to do the math and we were to look at what's the max loan on this, right? So 125,000 minus the 75%, okay? 93,750. This would be $31,250. Okay, but you gotta remember this is over 8 weeks. Okay, that's over 8 weeks. So if I were to take this, okay, and we say for 4 weeks, okay, what would be that amount basically then for the month? And you don't have to do math in your head to be a CPA, just FYI. So 15,625. Okay, make sure we get the bottom of that. Okay, make sure we get the bottom there. Okay, sorry. So it's no more than 25%. So if you have some pretty high rent or biz loan interest, you're going to add all these in, and for whatever reason, it's more than 15,625 a month. Okay, well, only 15,625 a month is going to count, or $31,250. Okay, so this is basically saying it needs to be at least 75% on the payroll cost and no more than 25% on these other things. So the question that I get is, well, JJ, for me to get full loan forgiveness, the amount that I'm spending on the rent and utilities, all that stuff, I don't have enough to get to that amount. So should I give everybody a raise so that I can get full forgiveness? So the answer is no, okay? That'll end up burning you based on the head count, and that'll be another video. But the thing is that you've got the money, so if you spend it on all of these items back here, right? Just what you need, you spend it on it. And then you have money left over. And you just go, there you go. Thank you for giving me $125,000. I only ended up using, $108,000. Okay, so here's the rest. Okay, here's $17,000. Okay, see, I did some math in my head. So you just give it back. Or if you're like, you know what I could do with that 17 grand right now? So I am just gonna pay that over the next 2 years. So the goal isn't to try and get to forgiveness for the sake of forgiveness, right? So if your employees are on on unemployment, and you don't have it, you don't need to now figure out the employees that are left and give them a raise, and then, well, do you pay some to the employees that are gone and do it part-time, and do you hire family? Why are we doing this? Okay, this isn't a card game that we're trying to figure out, how do we make sure we get it all forgiven? Okay, from the standpoint of, you can't make up expenses. And I don't even mean inventing, it's just, you can't make up payroll, you can't create it. It's meant to be based on what you did in the past, period. Okay, and I will have another video on it, but the thing to remember with the head count and the dollar amounts, there's a real misconception that if you just have everybody hired back June 30, boom, you're covered, you're gonna be forgiven. The first thing that has to happen though is, it's whatever you spent, okay, in your 8 weeks. The only thing that the June 30 head count can do is hurt you, period. It doesn't help you, it only can hurt you, okay? So you may have, here's my dollar amount, okay, for my 8 weeks that I spent, and I spent it all, okay, perfectly, in the sense of it was 75% for payroll, 25% for these other expenses, okay? So you think, right, you can pack in all these expenses, right? Now you may have done some raises over here and paid triple rent, that you can't do. You can't do any of that, period, okay? I'll talk about that in the other video. But then if your head count changes, okay, it's gonna affect your forgiveness. And what they're gonna look at is, well, how many employees got paid here over that payroll cost? And in essence, what was the average, okay? And like per employee, so to speak. And then it's like, well, what's the head count over here? And if they're comparing it, it's like, well, I gotcha. You had less employees and more payroll for less employees. Boom, bazinga, you're not gonna get as much forgiven. So here's what you need to know. If you go and try and do raises to try and get forgiveness, you will be stuck with owing money that you don't have at the end of the 8 weeks. Because what you would have done is paid out to employees, okay, or potentially more to yourself, right? And then at the end of the 8 weeks, you're like, well, hey, I spent it all. I spent at least 75% on payroll, so I'm good, right? Well, what's the head count? Because if the head count was low during the 8 weeks and then the head count is high, okay, that's gonna hurt you. Okay, so we'll go through another video on that, and all you need to know this is your takeaway. If it's kind of a mind bender on how that works at the end, but here's all you need to know. You have to first spend the money during, and if you have more employees during, or if you have less employees during, the way that the head count's broken out and the way that you come up with the quotient, and you're comparing it to potentially 2 different periods, it only can hurt you. It even says it in the law, okay? The only benefit is that there is no benefit, okay? The only thing that it can do is hurt you. So you need to just not think about, well, if I hurry and pay a bunch more, or if I just hurry and make sure I got everybody back by June 30. You just really can't rig this thing. It's It's been put together in a very wonderful manner to just do what I've been saying, which is, what is your payroll? Just pay it, okay? Now, if it ends up being a little more, then it ends up being a little more, but you actually then needed it. You weren't just hiring people just to get to forgiveness. Meaning, if for some reason you had to hire another person, I don't know the circumstances, I can't think of every scenario, but let's just say that you absolutely needed another person. You had the kind of job or maybe the position that you had, that was vacant, and now you filled it, whatever. Okay, so you can't take that as, oh, well, you just said that if I add people, it'll count. Okay, it's not what I'm saying at all. I'm just saying you use the payroll for payroll that you needed. So if at the end of your 8 weeks, you still have some dollar amount that's unforgiven, well, it's just representing the money that you had to pay that additional employee. Okay, if your head's spinning a little bit, it's okay, mine does too on it. But here's all I need you to know, okay? The June 30 thing doesn't help you. It's not a bailout, okay? If you do raises, it's gonna hurt you. And here's how it hurts you. The money will have been spent, and at the end of the 8 weeks, you will not have full loan forgiveness. But the thing is the goal doesn't have to be full loan forgiveness, because at the end of the week, at the end of 8 weeks, you either hand it back or you pay it over 2 years. No big deal. If you're needing it for other purposes, well, why wouldn't you just, for the 8 weeks, you have to do exactly what it's intended for. You get to the end and you go, well, now I'm going to borrow it, right? Because in the 8 weeks, it's a grant. It's been money given to you. In essence, you've been entrusted with money to do what it is the government said. And then after the 8 weeks, you did it. Okay, now you can either pay it back immediately or over 2 years. Follow? It's just to pay what it is that you need to pay, right? So if everybody goes on unemployment, then everybody goes on unemployment. And at the end of the 8 weeks, you go, well, I didn't need it because everybody went on unemployment. Okay, well then you just give all the money back. You didn't spend it, you still have it. So just a quick aspect here, okay? Just as a reminder, okay? Your monthly average for the last 12 months, no matter what the math is, that will always be less than that. Okay? It's not because I picked 50 grand. You run the math. Okay? So if you've watched this video, you need to find your application and you need to just work the math for yourself. You'll just be relieved to go, oh, there's the number. Okay? And it's not even, whoa, there's a number, so I got to meet that number. It's just, oh, okay, that's the number that we're dealing with. Right? Because if all things are even, you had 4 people last year and you have the 4 same people this year, and maybe there's a little bit of raise at year end, okay? All things being equal, well, you're just going to have these same expenses. You're going to probably at least get to that. Because if everything's been the same for the last 12 months, okay, at 50 grand for these expenses right here, well, it's just going to continue to be 50 grand, okay? Well, you only have to do 56. Well, you can do 50, okay? And then if you don't have a lot of this, okay, well, no, you don't get to just pay extra to try and get loan forgiveness, because it's at least, meaning you could spend more than that, but just spending more on payroll isn't gonna make your loan forgivable because of the head count. And at June 30 and the comparisons, there's not a way to rig it by just paying the people that are there more, period, okay? Period, all right? So you're looking at this, so do that math, okay? Get your app out, okay? What's your monthly, what's your max? Take it times 75%, okay? Then cut it in half, that's what it is per month, okay? Then you take, well, what's the difference here? $31,250 is the max that can be spent on these things. Break that up, it's $15,625. You should already know what your payroll is going to be unless you're closed down and your employees are already on unemployment. You should be able to project it right now. It's just like, well, okay, based on what I've got now and based on my average utilities, my average interest amount, my rent, right? Should know all these things almost up front. to then go, oh, okay, this is kind of where I'm at. But the goal then isn't, oh, so that's where I'm at and I'm short here so I could spend there. I mean, think about this. This would be the real strategy, okay, for me, for my clients. Here's the real strategy, okay? Just spend what you need and end up with some at the end, okay? This isn't a hole in your pocket, gotta spend it. End up with some money at the end. I mean, you gotta pay it back, I get it, but you could pay it back over 2 years, okay? Low interest rate, because you might need it. You might want it. And then you can use it for other purposes after the 8 weeks. So think about it the opposite, okay? You just got a windfall, an easy loan, low interest, okay? Deferred payments that's covering the payroll that you need, the rent that you have. Why wouldn't you actually have a goal of, I want to have some left over? And then you can just hand it back. Now, I do want to note to you that the final law excluded the employer taxes. So you'll notice here, when I talked about the payroll costs, only the SUTA, okay, that's the state unemployment tax, was included, okay? Here, right here, it is not the employer taxes. It's not the Social Security and Medicare in addition to that. All right, so you'll see on the next video, I'm gonna write down a few things to kind of show you the end result. But here's the other thing to note is you can't prepay anything, okay? If you have a payroll period that's falling in the early part of your 8 weeks, that's fine. I mean, just use your PPP money to pay that payroll, right? Because in essence, it should equal itself out, because really what it's going to come down to is it's a literal, what was the payroll for those 8 weeks? Like literally what's the date, okay? 56 days, okay? And then you're gonna look, if you were a Monday through Friday employer, you're gonna go, okay, so here's those days, okay? So it doesn't matter if you paid some payroll here and some payroll here and payroll potentially even after, right? We need to clarify if you literally have to pay it, but only 8 weeks or only 56 weeks of payroll, 56 days of payroll will be included, period. Only 8 weeks of rent, which is 2 months of rent, will be included, period. Only 2 months, okay, or 2 bills of electricity and gas and water and internet and telephone will be included. Only that amount, okay? You can load up and pay extra, which you shouldn't do because that's not what this is meant for, and it's not gonna help you. It only can be 8 weeks worth, period, okay? And then on the interest, it's only 8 weeks worth. On the health insurance, it's 8 weeks worth, which is just, it's 2 months, okay? And yes, you're gonna wanna pay those things in the 8 weeks, like literally pay those things. The payroll, we've gotta get an answer on where, for this period, if the payroll period's a few days after, is that gonna work okay? My hunch is yes, because it'll be, well, what did you incur? But that would just be on payroll, okay? You would need to pay the rent and the utilities and the match and the health insurance and the interest, okay, in that period. So you can try and come up with, well, does this count as utilities? And could I count that as rent? What if I'm, leasing my car? No. Now there's some different rules for the self-employed, okay, but that's for the self-employed. So it doesn't matter what you call it on your P&L, utilities, based on what we know now, based on the law, would be what, if you asked your grandparents, hey, what are utilities? They would tell you what utilities are, which is gas and water and electricity, right? And then, and whatever small things come on those, the garbage and, those kind of things, right? Just part of the utilities. What's the phone, right? It's all the phone lines, the landlines, does not include cell phone. So it's okay if you want to ask questions, but it's almost like, why? I mean, it's the most basic. Like if it's not gas, electric, water, landline, telephone, and then the internet, how is there any other questions? I mean, seriously, how is there any other questions? until the SBA comes out and maybe expands that. Okay, does this count, does this count, and does this count? Well, is that gas, electric, water? Is that a landline? Is it internet? Right? It's the internet service. Okay, and I don't mean the service because you have an IT company servicing it. It's like the cost of the actual internet. So think of all the things you want to think of, and it's just going to be, you just ask yourself, but is it those things? Okay, and then the thing to know is that you're going before the bank. So if you really just have a quandary, okay, you need to talk to your bank, because it's going to be your bank to decide. Technically, I mean, I'm happy to field questions, but it's not me that's going to make a decision on this. I mean, I've been surprised, when people were getting the PPP loans, I was like, well, I mean, that doesn't qualify, that shouldn't qualify. And then they come back and they're like, well, bank qualified it, and I got money on it. Okay, well, will it even get forgiven? Because you got the money not under false pretenses, but you qualified for the money with qualifications that didn't count. So how is it at all that you're going to get any loan forgiveness? Period. Right? So at the end of the 8 weeks, okay, within a certain period of time, you're going to take your receipts and your check copies, right? The invoices, everything that you paid, you're going to show the payroll, okay? And you're going to be talking to a bank examiner that represents, in essence, the SBA. And here's what you need to know is that the bank is deciding how much the government's actually going to then pay off this loan. Do you think that that's a light decision? Okay, do you think that's a light decision? It's not. There's not going to be any crying and whining that's going to change a bank examiner's mind, not because they're being a jerk. It's just, is it a utility? Is it rent? Okay, so think of this. I talk about this with expenses. It's almost like, think of this, right? It's that smirk test, right? And if you find yourself saying, well, would this count? No, I don't know what you just put before. Well, would this count? If you find yourself saying that, then no, it's probably not going to count. I mean, it's the most basic items. It's the 56 days. They're going to see the payroll. They're going to see the head count, okay? The head count is on the forms that get filed with the IRS and the Oklahoma Employment Security Commission. There's just no pulling wool over anybody's eyes. So just pay what it is that you need to pay. I ran through the numbers here for you, but really at the end of the day, pay what it is that you need to pay. Don't make up stuff. All right, so hopefully this was helpful. If you want to take a screenshot of this, let's see. If you want to do a screenshot, let's see, I think I have, all right, I've got everything in there. If you want to do a screenshot. All right, so I feel like I should do bunnies or something. All right, screenshot. All right, hey, thanks for tuning in. I'd love it if you subscribe. It's early. I was up early doing a television live interview. So it's dark. I've got lighting here, but you can see the board good. So hopefully you picked up some stuff here. And if you got PPP money, feel relieved and relaxed about that first and foremost. And in some ways feel lucky. I go live on YouTube, as probably a lot of you know, every day at 4 p.m. and Monday through Friday. And it's heartbreaking for people to share that they put application in, let's say on the 3rd, a number of them, or on the 6th or 7th. And the banks are like, hey, you're good, you're in line. And then they got a call yesterday after the money ran out to say, the money ran out, we're sorry, we don't have any funds for you, right? So these are people that were planning on it, saying, hey, yes, employees, we're gonna get our money and we'll do payroll, and now they don't have money for payroll. So spend it on what you need. This isn't a time for strategy. This isn't a time to go, well, if I do this, do I get full forgiveness? So if I do this, I get full forgiveness. If I do this, you don't need to panic and worry about this. What are your normal expenses? Pay those. All right, hey, I love it that you're listening. And if you made it to here, I appreciate it. Just trying to be as thorough as I possibly can. And don't you ever forget, you've never met a CPA quite like me. All right, appreciate it. I'm gonna have another video, kind of run through some of the other nitty gritty that'll make your head spin, because it makes mine.